Hi, this is Alan Tribble, and this is my second video on the subject financial accounting. This particular video addresses topics like margins and discretionary spending, and in particular focuses on how business leadership uses discretionary spending to improve their margins and ensure profitability. One other term commonly seen in financial analysis is margin. Simply put, margin is a measure of the difference between profit and sales. We typically measure everything relative to net sales, not gross sales. So gross margin is simply gross profit minus net sales. Gross margin is a measure of how much of your costs are the costs of goods sold. Operating margin is then operating profit minus net sales. Net margin is net profit minus net sales. Net margin is also known as return on sales, or ROS. Margins are a typical means of measuring the profitability of a company or product line. Higher margins means higher profits. As we mentioned earlier, your margin, along with your market and market share, is one of the key metrics that is used to judge the long-term success of your business. If your margins are too low, you won't have enough cash on hand to make the long-term investments that would enable you to stay in business as the needs of the market change around you. After we've got our business up and running, it's an ongoing balancing act to try and find a good compromise that keeps both our customers and our owners happy. Customers always want lower prices, so lowering our prices would make our customers happy. But lower prices typically mean lower profits and unhappy owners. If we increase our profits, we make the owners happy. But the simplest way to do that is to raise prices, which makes our customers unhappy. We strike a balance between those two extremes by proactively managing our expenses. Many of these expenses, the cost of materials, labor, rent, interest, and others, are fixed and not something we can change easily. Business leaders typically focus on what we call discretionary expenses, those expenses that are within their ability or discretion to control. We could try and purchase cheaper materials or negotiate lower salaries with staff, but those decisions could affect the quality of our products in the short term and have negative consequences on our long-term ability to stay in business. Businesses typically look for solutions that won't have such major impacts in the short term. Larger businesses typically set aside yearly budgets for things like travel, the cost associated with visiting customers or attending trade shows, internal research and development, or IR&D, the cost associated with developing new features for existing products or developing new products, bid and proposal, or B&P, the cost associated with writing a proposal to a customer so we can win new business, or capital, the cost associated with assets we will depreciate in future years. These categories are often the obvious buckets to target for reduction when times get tough. Behind every yearly budget, there are a number of assumptions about how much income we're going to have during the course of the year. But if we lose a major program award, we won't have the income, and we find that we'll have to cut our expenses as well. We do this all the time as individuals. We may be planning on taking a major 2-week vacation for a once-in-a-lifetime experience, but if we lose our job or have a major medical issue, we cut corners and readjust our plans. I hope that this overview of financial accounting has helped you understand the big picture. If you'd like more detail, please feel free to take your favorite accountant to lunch. If you'd like any more information on any of the topics we've discussed so far, please investigate the 3 options shown above. First, you could buy the book. Both electronic and hard copies are available, and you can order those from your favorite bookstore or most of the major online retailers. Second, you could take the 2-day professional development class. If you'd like more information on that, please drop me an email at the address shown. Finally, you could subscribe to our new YouTube channel, BM4SE. Please tune in and look for future posts in the very near future. Thank you.